All right. So I just sat here pretty much designing the ICT market maker model. And I just want to explain it in depth, honestly. So that's going to be the goal for today. And then at the end, I'm going to show you how I used it today. For example, I actually used it for a trade today. And sometimes it's not going to be as beautiful as, this. This is very obvious, right? Sometimes it's not going to be like that. Anyway, so as you can see, we have pretty much this a market maker model is the power of three, all of ICT's concepts with fair value gaps, order blocks, mitigation, profusion, everything. Um, you have SMT divergences, market shifts, everything you can imagine. So this is like the most advanced, but the most probable. This is the model itself of what pretty much ICT uses every day to trade. This is a great model, and you see this literally on the weekly chart of ES, honestly. We'll go take a look at that later. But first, let me explain it. So, just to start it off, we have this accumulation, right? This is all consolidation, and usually this happens after a sweep of a higher time frame or a fair value gap, a higher time frame or a fair value gap. But it's swept, let's say, or it doesn't have to. Once it starts doing this consolidation move, we know it's either going to shoot up or shoot down. So clearly it shoots down, right? So on this side, this is the sell side of the curve, right? So this is the sell side of the curve. Comes down, breaks structure to the downside, and now it left these engineered highs. And these are reaccumulation zones for smart money concept traders, where it comes down. We know where the path is going, comes back up. And if you want to go short, usually you want to wait for the buy side of the curve. But, you could go short off of here, target other liquidity points. But the main way you use this is on the buy side of the curve, right? You don't want to enter in off of this side. You want to wait for this side to play out, let it engineer all these highs here, one high, two high, these ultimate engineered highs. So you wait for the buy side of the curve, and then majority of the time you'll get a, just like this right here, you'll get an SMT, right? So this is a smart money reversal right here. Usually it's identified. You could look, if you're looking at NASDAQ and you're looking at ES and SMT, as if one is higher or one is lower, right? So usually sometimes these could be equal, right? Like this on NASDAQ, and one could be like this on ES. And when it's like this, when this low is down to this, a lower low, and on NASDAQ, it's either equal or above, that's a good SMT divergence indicating that the price is going to go higher. So you wait for a higher time frame PD array, right? You could wait for higher time frame PD array for it to tap into it. And additionally, usually 99% of the time, there's going to be sell side liquidity, which is perfect, right? So you get a higher time frame. The sell side of the curve is you're now believing it's over. And what confirms that it's over is this right here. And this is extremely important that this high is closed above. This is the market structure shift, which is perfect. Exactly what you want to see. Anyway, once you see the market structure shift, you can most likely anticipate a bullish order block, bullish fair value gap. Any bullish PD array, watch them, because now we're anticipating this whole buy side of the curve to get ran through pretty much. So as you can see, now we're into the buy side of the curve, and that's very important to identify. Over here would be the low risk entry. If you get a higher time frame PD array, a sell side liquidity sweep, especially this market structure shift, you could look for a fair value gap to re-enter in off of. or just to enter in off of. Equilibrium, order block. There's so many ways, but this would be a beautiful entry right here. And there's going to be stages, right? Whether it's most likely during these times, if it sweeps a high, it's going to come back for a reaccumulation, right? So this is where usually you would like to get in, right? I don't like this area here, even though you can 100%. There's nothing wrong with it. I don't like it because sometimes it could just sweep out this high and move lower. But anyway, so this is an accumulation phase. Then it goes back up. This is considered, this could be considered a whole accumulation. So sometimes it will react off of this stage where it's over here consolidating and it meets it again. And then it reaccumulates. And this would be a beautiful entry because now you clearly see the whole market maker model and you know exactly what lies above it. You know exactly what the market's starting. So this is a nice low risk entry as well. Now, I know it looks too perfectly drawn out, and sometimes you'll only see this on certain time frames. Like I've seen this on the weekly time frame, and I've seen this on the 1 minute. I've seen this on the 5 minute, the 15 minute. I've seen it on every time frame. But you have to understand this as well. You have to understand what the market moves off of. 3 reasons why the market moves. Number one, and this is the number one for me. Some people, they think they're all equal. I believe this is number one. Liquidity. 100% liquidity. The market's always bouncing between highs and lows. Number two, to rebalance inefficiencies. Now, what are some inefficiencies? If you watch ICT, you know volume imbalances. You know fair value gaps. That's the most obvious one. You know liquidity voids. And honestly, some inefficiencies could just be a too far stretched week. So that's where we come into rebalance to equilibrium. Sometimes we're so overbalanced. Sometimes we're so extended, right, on one side of the curve. Sometimes the sell side curve is too far, and sometimes the buy side curve is too deep. And so the market likes to rebalance to equilibrium, which is literally, if you guys don't know what equilibrium is, it's the halfway point. Usually, that's what equilibrium is. So it likes to rebalance to those areas. So always remember inefficiencies, liquidity, and equilibrium. All right. Anyway, so now I'm going to show you exactly how I use this model today. So let me just mark out the market open here at 9:30. So I'm in class from 9:30 to 9:50, and then from 10 to 10:40, I'm out of class. So I looked at it I'll be honest, I looked at it over here around 10 o'clock, 9:45 actually. Right? So I seen the whole move already happen pre-market. What I talk about, right? We had the sell side of the curve here. We left engineered highs, unprotected. These never swept anything. So this was considered, if we go over here, this was considered the consolidation phase, right? So we have this whole consolidation range over here. Let me just find this. That was the consolidation range. Now, as well, you know the power of three. We have the manipulation up. We don't even have to worry about that, but it manipulates up, swipes out all of these engineered consolidation range, and then falls, right? So this is the range one, reaccumulation, goes down. This is range two, reaccumulation, comes down, sweeps out liquidity here. So there was the sell side liquidity that we talked about, sell side liquidity. And I'm 99% sure this created an SMT divergence right here. Let me just change this. I'm pretty sure that created an SMT divergence as well, right? So now we can just use what we know, what I've been teaching. We have a fair value gap, and it clearly inverses. Now, this is off a 15-minute time frame. I didn't enter until a 1-minute time frame, and this was completely pre-market. I'm just showing the move. I had to hop in when the move was already being made right off this low candle, actually. I just entered in. Let me get a screenshot because I know everybody likes to say, oh, why don't you do the, why don't you actually show? Why are you just doing, can't really see nothing, but I'll show you. Let me find another screenshot. And I actually, even better, I even caught it on the down move as well because I knew that it was going to come take out some sort of liquidity. And then at the end of the day, what did it do? Hit everything. Anyway, let's get back to it. So we knew we could have entered in long right here, honestly. Right? Put our take profit 1, 2, and 3. Because now, from going from the sell side of the curve, what else did we had? We had the buy side of the curve now. And we know eventually this high is going to get hit. These two already did. It's just, what is it doing? Because I just spoke about it. It just reaccumulated an entry down here. That was the reaccumulation phase. Reaccumulation, right? And this could be a reaccumulation. Anyway, so now we know it's going to extend up. Let me show you my entry and how to use it because I knew that we were in a market maker model. Anyway, let me just delete this. Okay. So here we are. We're at 9:45, exactly what I'm looking at. So the 5-minute is very chopped. You honestly, I couldn't find anything off the 5-minute because look, there's not even any fair value ups, nothing. So I had to play off of anything I had. So I saw this liquidity here. Right, I went down to the 1-minute. That was the main entry, what I took. And I knew that we were in the buy side. So we had that 1-minute liquidity sweep. I knew that we were already in the market maker buy model. So my bias is completely bullish. We had equal highs. This is clear buy side liquidity residing. Why do you think it came up, tapped, came back into a fair value gap, and then had to go back up? Anyway, came down, swept it, boom. There's an inversion fair value gap here. I waited for that to get filled, and I believe it even came all the way back, but it did close under. Now, let me say something. This was completely okay because when you enter, what do? You put your stop underneath this low. So I entered in off this inversion fair value gap in this liquidity sweep, knowing I was in a market maker buy model already. We knew the higher time frame bias. So closed above here. I waited for a tap back in, put stop underneath the sweep. We could target take profit 1, take profit 2, and I'd say eventually take profit 3. Right? Now, depending how you would like to chart your stop, I believe it will hit this high eventually. Yep, 100%. Now, I was looking at this area while I was in class as well, and this would have been a fine area to enter as well because we had this liquidity sweep, but there was no inversion fair value gap, so that's why I wasn't looking for any entry. I was looking on multiple time frames and never showed nothing. Today was a very, very choppy day, but if you zoom out and if you really look at the market as we called it out, we had the sell side of the curve, and this is on the 5-minute now, so it looks cleaner, and the buy side of the curve. Right? We had our market structure shift here, just like we talk about. And this is how I look at the chart. I look at it as if I just marked it out up here. Like when I see this, I see the candles like this. And this happens every day. And we can predict this. This is literally happening every day. It sweeps out, right? It sweeps out sell side liquidity here. And even over here, there was a prominent low. I'm sure that's an hourly. Market structure shift. Now, what do? We're not just a usual breakage structure fair value app type of guy. We like to get in low risk, right? So we wait for this close. We enter in long, but this is pre-market, so we can even trade. Well, I couldn't trade. We could have targeted this high. That was still a 1 to 2. Could target this high, right? This high, and eventually probably this high, which is an insane trade. I mean, this is happening every day. Now, I had to jump in on a reaccumulation zone right here because I couldn't trade 845. I had to jump in on a reaccumulation. Now, just knowing it, I knew it was going to go up. People, you could jump in on these reaccumulation areas 100%. It's not bad. It's just you have to know the market maker model 100%. Let me show you one more example that's going to actually blow your mind because yeah, I know this might be handpicked, but anybody will see this next one. Now after I learned the market maker model, I was looking at everything. And look at this time frame. Look at it. The weekly time frame. It's insane. This happened from December 21st all the way to 2024. Sorry, December 2021. Look at this. Insane. I don't know if you guys see it, how I see it, but we have this sell side of the curve, and then we have this buy side of the curve, right? And we end up taking out each point of liquidity resting above it. It's insane. It is, I don't know. You could call out years with this model. This is years worth of candles. You have your liquidity sweep, and this could have been seen as an SMT, right? You have your market structure shift. Beautiful. Right here, market structure shift. Here, let me put that over there. Now, you could have went to the daily, found a fair value gap entry, but what did we do? We swept liquidity. We broke structure to the upside. We could have entered in straight off of that. Now, yeah, you could have waited for this retracement candle back down to equilibrium, right? What does it do? Just like I say, what does it do? It rebalances to equilibrium here. Boom. Equilibrium. Rebalances into it. You could have entered in off that. Me, because I don't want the market to run away, because that's what it does sometimes. What is that? I mean, come on. Clear. Inversion fair value gap. You could have entered in long 1000% up to this high, TP1, up to this high, TP2, up to this high, TP3. On a weekly chart, you have everything. Reaccumulation zone right here. It's insane. This is going to make you the most profitable trader in the world if you master the strategy. Reaccumulation zone, right? Comes down, market structure shift, sell side liquidity sweep. Boom. Now you know you're on the buy side of the curve. Reaccumulates there. And this is weeks. Weeks. Reaccumulates there. Sweeps out this. Very higher time frame high. Has to come back down. Reaccumulates here. Sweeps out all-time high. Still running. Anyway, this is just how powerful the market maker model is. Thank you for watching. I appreciate it very much. I hope you enjoyed this video. Please look into this, rewatch the video, ask any questions in the comments. This is insane. Insane.